recent figures on the US labor market have been pointing to the fact that the Labor Department report will not be in line with the forecast. However, it was impossible to predict whether the report would be above or below expectations, and the fact is that the data turned out to be mixed. The situation developed according to the negative scenario. Thus, the unemployment rate increased to 3.6% from a 3.4% instead of remaining unchanged. That was enough to cause a noticeable drop in the US dollar. Meanwhile, the number of new jobs in the non-farm sector surged by 311,000 instead of 101,000. Nevertheless, higher unemployment points to the worsening of the labor market conditions. Notably, it was the labor market that was forcing the Fed to raise the key rate by 50 basis points despite slackening inflation. In other words, the US Labor Department report settled the issue of the magnitude of the future key rate hike. Now, the Federal Reserve will have to raise the benchmark rate slightly and thus following a decline in the US dollar. The currency may face a lot of obstacles. On a Friday, Silicon Valley Bank, which is among the 20 largest credit institutions in the United States, went bankrupt. The collapse of a Silicon Valley Bank marked the largest failure of the U.S. financial institution since the 2008 financial crisis. Just after that, the Federal Reserve Bank of New York decided to close Signature Bank. The regulator explained such a decision by systemic risks caused by the massive outflow of deposits. At the moment, the situation is developing in a way typical of a banking crisis. The bankruptcy when one bank entails a chain reaction since other banks that issued short interbank loans to a bankrupt credit institution are facing a liquidity shortage. Thus, they are not able to return the attracted funds or provide loans to other financial institutions. If monetary authorities do not react immediately, other banks may also go bankrupt. That's why it was decided to provide eligible financial institutions with emergency assistance. In other words, the Fed is planning to switch to a quantitative easing of a massive money printing of the amount of $1,100 billion. What's more, some mass media sources suppose that the Federal Reserve should be blamed for the bankruptcy of a Silicon Valley Bank. The key interest rate hike has negatively affected the stability of the whole financial system. It looks like an attempt to make the regulator cut the key rate. In any case, money printing of the key interest rate cut will lead to the greenback's depreciation. In this fight, US President Joe Biden will deliver a speech in Congress today. Now, a lot will depend on his comments. On the trading chart, we see that the euro gained more than 100 pips against the US dollar on Friday. The jump could be explained by a slump in the greenback's long positions amid the US labor market data and the news about the Silicon Valley Bank. As a result, the euro-dollar pair reached a new local high of the week. Under the current conditions, the price consolidation above 1.07 may lead to a new rise. In this case, traders are likely to ignore signals of the euro's overbought conditions in the short-term periods. However, the situation may change if the quote drops below 1.0650. Meanwhile, the pound-dollar pair must reach the resistance level of 1.2150 thanks to the upward impulse. At this level, the volume of long positions dropped. Nevertheless, the pound sterling recorded after the recent slump and set a new monthly high. Judging by the price fluctuations, the quote returned to the recent range of 1.1920 and 1.2150, which reflects bullish sentiment among traders. This in turn may lead to a rise in the volume of long positions. To intensify the bullish sentiment, the quote should consolidate above 1.2150 at least on the 4-hour chart. Otherwise, the price will continue hovering within the existing channel. For now, we continue to learn developments on financial markets. Subscribe to the channel and follow news with us. See you soon!